Hello and welcome back to Stock Market Weekly. I am your host, Evan Medeiros. Thank you so much for tuning back in. This is a show that goes out every single Friday, and we break down all of the important moves across financial markets through the lens of technical analysis, try and make some sense of what's going on in the stock market as objective as possible, lay out the risks, the rewards. This is what we do every single week, so make sure you are subscribed to the channel. Keeps you up to date with everything that we have going on here each weekend. For this week, we have a handful of sort of related topics here. So small caps catching a bid, the rally sort of broadening out this week, little bit of rotation out of large cap land, mostly into small caps. We're going to talk about that. NVIDIA earnings, we had them this week. It was pretty much a yawn or a non-event. The stock really went nowhere, which is sort of a good thing. That means the market was pretty accurate in pricing going into the event, but really wasn't a whole lot of movement. We do have some thoughts on this stock though, so stick around for NVIDIA chart analysis. We had every sector closing pretty firmly in the green this week, which was nice to see. It was an inside week for treasury yields, so those really weren't causing too much stress out there for us. And of course, we have Thanksgiving holiday light volume week anticipated next week. So things are going to start to slow down a little bit here, and we're going to want to be prepared for that. Market closed on Thanksgiving next week as well. And towards the end, we're actually going to do a little news segment here. I want to show you a little bit of the trading that we did this week and might introduce this as sort of a news segment here overall. Don't forget also, Black Friday sale is running here at The Trade Risk. Everything is discounted, so check out our website, thetraderisk.com. Let's get into the data though. If we look here at the 1 week returns, you can see again Russell 2000 standing out here, up 4.5%, really leaving everything else in the dust. And if you look back over the past month of performance, small caps are starting to shine a little bit brighter here, up 8.66% versus 2 to 4% for the rest of kind of large cap land, let's call it. You can see that going into the weekend here, VIX is back around 15.31, so it's a pretty comfortable level. It doesn't mean that everything's shrugged off and there's a tremendous amount of complacency. It's actually a fairly healthy number here, so that's kind of nice to see. If we take a look at sectors, again, everything was green this week and pretty firmly in the green, so we had some nice unanimous sort of breath here. And if we look at our sector trends, this is one of our smart trend filters that we have built for TC 2000. You can see that we certainly are getting more sectors now kind of rotating back up. Industrials, for instance, late this week finally turned up, produced a fresh buy signal. We saw utilities earlier in the week produce a fresh buy signal, and then some of these other markets like energy and communication services are still working their way up. Biotech still in a downtrend, but it did have a nice bounce back this week. We'll talk about those charts in just a little bit. If we now take a look at breadth a little bit more broadly here, and we look at our favorite metric, 52-week highs, 52-week lows. If we zoom out here, you can see kind of the ratio really in full tact. We did get a nice kind of surge up here on Friday on the number of stocks hitting 52-week highs. That's exactly what we want to see to have just more confidence in this market, to have more staying power in this market. We did talk about the fact that the number of stocks hitting 52-week lows was kind of rising a little bit. It was off the floor and it's kind of just moving sideways here, and we wanted to pay very close attention to that ratio. And with the looks of Friday, if we get more days like this stacked up, that would certainly give us more confidence in that bull case. So for now, more stocks hitting 52-week highs here, but let's keep a close eye on that going forward. Now, take a quick pit stop here for Investors Business Daily. They are a sponsor of the show, so thank you, IBD, for helping make this show possible. This is their IBD 50. This is the top 10 in their IBD 50. You can see they had some big gainers here this week, led by really Rocket Labs here, which wasn't their first. Looks like Rocket Labs is ranked number 3 on their list right now. So check this out with a link in the description of this video. Get access to IBD Digital. They are running some Black Friday sales over there as well. Make sure you use the link in the description of the show. Tell them Evan sent you, and enjoy that subscription. Let's move things along here with the dollar and interest rate. So you can see that the dollar continues to basically skyrocket into the atmosphere here. You can see it's just been on an absolute monster tear. Looks like a chart of Bitcoin. They are just basically going up in the same exact exact fashion here, post-election, screaming to the upside. That continues. Finally, for yields, I'm looking at 10-year yields specifically. We kind of went sideways and finally didn't continue to put more pressure, rebounding to higher rates. So we're going to want to keep a close eye on that. It would be wonderful to get a break and a rollover in, say, the 10-year treasury yield. We shall see. But for now, it's still kind of stubbornly bid and just moving sideways. So we want to pay attention to it. If we take a look at commodities here, again, you can see another strong week for Bitcoin. This is week number 3 in a row where it's up pretty strong. Look at the past month now. It's up 45%. It's knocking on that 100K level. We had Bitcoin options debut this week. We're going to talk about Bitcoin and some of those stocks in just a little bit. Oil had a nice week. Gold had a nice week. Silver had a nice week. Commodities were on fire this week. So it was a good place to be. Let's get into some charts now. So we're going to kick things off with the S&P 500. And we can see the S&P 500 if we throw on a weekly chart first. You know, we talked last week about how we declined. We had, you know, kind of reversal, a retracement of that initial knee-jerk kind of Trump reaction, bullish market reaction. Election's over with. Election wasn't contested. It finished. It was quick, right? And the market loved it. Came out of the gates swinging here, breaking to fresh highs basically across the board. That was 2 weeks ago. Last week, we retraced some of that enthusiasm, right? A little bit of cold water got thrown out on the market last week, and it settled right in here, right at this area, which has been on our chart for quite some time now. And it's still a level that we're looking at and saying this is an important, you know, short-term line in the sand here, and the market digested it all week long. You can see that we again spoke last week about kind of this tale of two gaps where we had, you know, this gap here from last Friday's session, and then we had the big earnings gap here, and we basically said, look, coming into this week, it's going to set the tone in one direction. Which gap gets filled first? Which gap gets, you know, kind of left behind? That's something we want to pay attention to, and we got no answer to that on Monday. It was an inside day. Tuesday was, you know, a very loud session, but it still didn't really move us in the range. Wednesday, again, same thing, lots of range, but stayed in this range. And then finally Thursday, we saw this break up into the gap here for the S&P 500. And then Friday, we tried to make some progress higher. So look, it's not the most convincing follow-up week here in terms of buying action, but it was definitely a save by the bulls here. We managed to hold this election gap. We held onto this upper level support. We held the October highs, and we are now in the process of moving back up and are probably going to test the immediate all-time highs post-election, up around just over 6,000. So right now, I think our levels are pretty clear. The bulls won this tug of war. Let's keep an eye. We're not too far away from it. But if you're looking for the market if you're looking to risk manage the S&P 500, for instance, then I would still just be paying attention to this week's lows. I think that's really all you need to watch at this point. On the upside, of course, you've got your prior all-time highs marked for us. If we go to the Qs here, you can see things were just a little bit more kind of sticky, reluctant, a little bit less enthusiasm out of the bulls here. In fact, you know, we kind of just barely didn't even technically fill entirely this gap here in the Qs. You can see just a lot of intraday movement, but not a lot of progress getting made, right? Just a lot of spinning of the wheels here as there's lots of trading back and forth throughout the same exact range, but there's no real directional, you know, movement or advancement that's being set here. So the Qs back to just being a little bit concerning here. We drew this line last week and we said we did not like the fact that the Qs lost the July highs. You can see that we did manage to close above them, but it's, you know, still at it's not quite the distance I would love to see to feel all that comfortable about the Nasdaq 100. This looks like, to me, it could just still be setting up a little bit of a kind of bear flag here. So let's keep an eye on it. I don't love the setup here in the Qs, but we'll give the benefit of the doubt to the buyers. They did marginally win that tug of war this week, but it's still on thin ice. The Russell 2000, however, this is more convincing action. Take a look at some of the bars here that we saw this week. Monday was an inside day. Tuesday, you know, we bid off of the lows here. We didn't even fully fill the gap, but we had this nice session up. And we just had more range, more directional range happening here in small cap land. And you can see that we are marching back up to these post highs here. So we did hold above, again, our 225 level, and that's exactly where we wanted to see the market hold. Looks like it's on pace now to go retest these immediate highs. Russell 2000 still shaking my confidence a little bit on some of these weeks, but still kind of my favorite spot to be this, you know, just generally speaking, as we've been kind of, you know, beating the same drum over the past several months. And it still looks like this rotation kind of wants to happen. It hasn't fully let loose and rip and just trend strongly, but it's trying to, and it seems like, you know, it's on pace to at least get back up towards those highs next week. So that's the way the market is looking as a whole. Don't forget, next week, things are going to slow down quite a bit because we've got the Thanksgiving holiday. You know, just the volume should just be a little bit more sleepy here, and it tends to have a more kind of bullish bias to it these weeks. Again, speaking in general terms, of course. So where do we want to go next? Let's go to some of the individual sectors first. Let's start with semis. Let's start on the negative side. Let's get the negative stuff out of the way. Semiconductors here are still in kind of the penalty box in my mind. They're floundering, they're going sideways, they're really just kind of spending a lot of energy in this mid 250 area. We've already talked about this plenty, about how it hasn't filled the gap. It's well below the July highs. And it's just, you know, I was using this 245 area as a line in the sand. You can see it's just not really it's not really doing a whole lot. It's just going sideways. And ultimately, these corrections can occur through time. Maybe we just have a very sleepy, boring end of the year here for semiconductors, and then we start 2025 on a very strong note. That's very possible. It just doesn't look like there's much interest here in semiconductors, and this explains, of course, the Qs on how the Qs look a little bit weaker here. If the semis aren't moving, the Qs are going to have a tough time moving. And let's just go right to the individual main culprit here, and it's NVIDIA. Now, look, NVIDIA is the strongest in the bunch here, and that's good because it's also the largest, of course. So it has a very large weighting in these market cap weighted sectors and ETFs. The thing that I don't like about NVIDIA is just this technical structure of, you know, potential vulnerability. It hasn't rolled over yet. I don't have a position here in NVIDIA. I'm not really inclined to short it either. So that's just my personal preference. But it is very glaring here that this 140 area is quite important. This is approximately the highs from June. And you can see that the stock is just taking a lot of time here. So if I were involved in NVIDIA directly, I would just be looking at this 140 and paying very close attention to it, using that as my line in the sand. You can be long NVIDIA above 140, but if it starts to cascade below there, if it starts to expand with range and volume below 140, I would not want to be part of that trade. I think there's risk to fall back into this range and potentially risk all the way down into the, you know, 120s or so. Hasn't done that yet. I don't know if it will. I just don't love the look here. If it goes sideways, again, it needs some more time and then blasts off, it holds 140, beautiful. Then you could have a nice continued uptrend melt up into the year end. But we'll see. The market is definitely voting right now and just kind of, you know, again, feels like it's on thin ice, but things can move pretty quickly with bullish bias. You know, maybe it doesn't break and we do have this nice kind of trend up effect that happens over the next couple of weeks. It would be good for markets overall. So I'm kind of cheering for it. But again, I just think there's more interest in small caps and some other individual stocks rather than the big heavyweights here. So NVIDIA, I'm a little bit concerned, but I'm not taking a position one way or the other. But I think it's an important market. Let's go to Bitcoin next. So Bitcoin here has continued its run. So, really ever since breaking above this very orderly kind of year-long range, this 8-month range that it was in, call it over 70 $3,000 or so. It really hasn't looked back, and it's been in a melt up period. It's not really giving any strong pullbacks. It's consolidating, through time, just with a couple of days moving sideways, and then it kind of grinds up here. So it is approaching this big round 100K magnet. I've been posting on Twitter, on X, basically, saying that is a magnet for Bitcoin right now. And markets love to test these big, round, shiny numbers. It's baked into the human psychology of where everybody's placing orders and wants to trade. And generally, we tend to see markets actually overshoot these big magnet levels. I'm still waiting for that trade to sort of play itself out. We're certainly taking a little bit more time than I thought. I figured it would be quicker as we got real close to it, that we would just sort of gravitate to it. But it's come a long way, of course, and it's quite stretched in the short term. So I guess, we need to be a little more patient. IBIT, that would approximately be, in the 57s or so, basically, when you start to get 100K Bitcoin. And bulls are just very firmly in charge. I mean, we can throw Bollinger Bands on here. It's going to be stretched. If we throw on, so a daily Bollinger, you can see that's expanding nicely. You can see the weekly Bollinger, though. We're entirely above it this week for IBIT. So that shows the magnitude of move that we've seen. And if we look at Bitcoin here, you can see basically the same exact thing. Now, as again, I've been posting and we've talked about in some videos, you do have, a 60, 70-ish vol asset that went nowhere for 8 months, right? I'm going to call it nowhere. It was 20% range, but still you went effectively nowhere for 8 months, and now you're breaking out. You would expect the breakout to be fast, fierce, and powerful, right? Either direction, right? It's just the nature of the beast. When you have a volatile asset that you've kept constrained for such a long period of time, you're gonna get these big explosive moves. So I think Bitcoin is still just kind of in that move right now. No meaningful pullback to look at right now. They did IBIT, and actually all the ETFs now have options which are listed. So finally this market matures to another level where we can finally hedge risk. We can create more interesting sort of payoff structures and, really just define more specific trades here. So it's exciting to finally have, options listed across these ETFs. And we'll see how this continues to mature here. The big trade here starting to take all of the oxygen out of the room here. And now, even the mainstream financial media is picking up on MicroStrategy. We talked about MicroStrategy last week, highlighted it as, one of the big sort of elephants in the room, how it's picking up volume, how it's been in this big move up. This is a individual equity that is growing market cap very aggressively, basically being a Bitcoin treasury company, and is using some very clever financial engineering in the form of ATM offerings and convertible debt to essentially buy more Bitcoin, right? And so it is basically a levered Bitcoin vehicle. And, this bet is paying off in spades. Take a look at the volume here on the weekly chart. I mean, it just did $130 billion of volume. I believe, if I'm not mistaken, it actually was the heaviest traded stock in the world on Wednesday, outpacing NVIDIA and Tesla and Apple and the Mag 7. So there's a lot of attention on this stock right now. It had a lot of volatility. It's extremely volatile, but it is definitely tethered to Bitcoin at this point, and it's going to be fascinating to see this story unfold. I do still have a position here in MicroStrategy. I was a seller into the rise here in the first half of the week, and really went down to my minimum position size on by Wednesday. And when Thursday came around and kind of reset the table here and had a nice, move lower, I did start to inch back into here. So this to me is, kind of in my Bitcoin bucket. So if I want to be allocated to Bitcoin, I'm looking at MicroStrategy in that same kind of risk bucket. and I'm managing accordingly. You know, again, do your due diligence on this. It is extremely volatile. Markets price this at basically like a 200 vol or 180 vol asset. So it is, you know, definitely something that will move quite a bit if you don't have the stomach for it or conviction in it. So just make sure you have a trade plan there. But MicroStrategy certainly, I'm keeping things interesting here as Bitcoin gets closer to 100K. And you also have other, you know, mining stocks. So the old miners here like Mara seem to be, you know, kind of adopting that similar MicroStrategy treasury strategy where it's essentially now raising convertible debt as well to purchase Bitcoin and put it on the balance sheet rather than, you know, perhaps increase its operations in mining. So there's some interesting dynamics here where there's lots of companies now that are starting to that are looking at essentially adopting that MicroStrategy playbook. And, you know, it's going to make for an interesting 2025 as some of these companies get on board with that. So that's Bitcoin. That's MicroStrategy. We talked about semis. Biotech had a nice bounce back this week. So that was nice to see. Healthcare as well. Consumer staples starting to break out a little bit here. I know it's quite boring, but technically looking pretty good as they get a nice rebound there. They've been beaten up for the past month or two. And Tesla also looking interesting here into the end of the week. You can see basically this week it was super tight. 4 days going nowhere, and then Friday it's starting to, you know, kind of make that breakout attempt, volume inching up a little bit. So Tesla here certainly getting lots of love post-election, and so that trade looks to still be on. Last but not least, for the individual stocks, super micro computers. Take a look at this rebound this week. I didn't catch the full news here, so of course delisted. There were some accounting issues. We had Ernst & Young sort of resign as being the auditor, right? We talked about that. And so I believe, you know, Supermicro filed some paperwork here. Basically, is trying to get on board with the auditing process and trying to clean things up a little bit. Stock was up huge this week. Still, again, be careful on that. I don't have a position directly. So I don't have too much other insight to share except for lots of volatility. So that, I believe, is about everything I wanted to talk about. I wanted to finish the show here as we're running a little bit long with the activity from our trading system. So you often hear me talk about our Lamerick, Merlin, Galahad trading systems. They're basically, you know, just all operating on different swing trading or trend following timeframes. So here's the activity that we were doing this week. So basically, breaking up the number of buys and sells by each trading system this week. So you can see that basically we were net sellers this week. So Lamerick made more sales than it did purchases. And when you combine that with Merlin making 8 sales, Lamerick making 17 sales, we were basically a net seller of stocks today, this week. This is over the course of the entire week here. And so you can see that's just where the activity is. Lamerick operating on a very short term. It's really finding lots of opportunities right now, and it's loving the volatility that it's seeing in the market right now because it's rotating through individual swing trades and it's doing pretty well. But despite the fact that we were sort of net sellers here, I mean, this is the exposure across all the trading systems right now. And you can see very long, very bullish and very kind of in this market right now. So Merlin here has our highest exposure. It's 140% long right now. So it's deliberate leverage, it's tactical leverage. Every position has stop losses, but it's, you know, very much in this market. This is effectively Russell 2000 exposure. I mean, it's not entirely, but there's a lot of that small cap exposure captured here in Merlin. Lamerick trades a lot of the big stuff. Right now, it's pretty long, and our trend following system is quite long, right? So this is where, even though we were selling some things and rotating through opportunities, this is sort of kind of the meat and potatoes of what is happening here in our individual trading system. So going to potentially be, you know, kind of looking at some different views here on sharing this on a weekly basis, just to kind of show you what our tactical rules-based swing trading systems are up to. And sometimes it'll match kind of what's going on in the market, and sometimes it might look a little different. Right now, nothing is short here held, only Lamerick shorts, but there's no short positions on right now. So it's just a net long book right now. And doesn't count for any of the trades that are potentially getting put on for Monday yet. So, That's it. That's what I got for this week. Don't forget, we are running our Black Friday sale, trading systems included. So if you are looking for some new trading systems for the new year, or if you're looking for TC2000 downloads, check it out right now. Our sale's going on through the end of this month. And with that, thank you so much for tuning in to another episode of Stock Market Weekly. We got links in the description of this video. Have yourself a great week. Have yourself a great holiday. I believe I will be on... believe I'll be on normal schedule next week. I don't know. Could be on the road short episode, depending on where I am. I haven't really thought that through, but stay tuned. Hopefully everybody has a great holiday and some time away from markets, and we'll see you in the next video update. Take care.